The making of a maverick. Gary Stevenson's unconventional path. Gary Stevenson wasn't born with a silver spoon. He didn't inherit a fortune. He was just a regular guy with an insatiable curiosity and a burning desire to achieve financial freedom. Gary's journey began with a fascination for the stock market. He devoured every book and article he could find. He spent countless hours studying charts and analyzing market trends. He didn't follow the herd. He delved into macroeconomics, understanding how global events shaped market trends. Gary's story shows that anyone can achieve financial success through hard work and dedication. The world beyond the charts. Macroeconomics as a roadmap. Imagine trying to navigate a new city without a map. You might eventually find your way, but it would be a confusing and inefficient journey. The same principle applies to trading. Relying solely on technical analysis without understanding the broader economic landscape is like navigating the markets blindfolded. Macroeconomics is the study of the economy as a whole. It looks at factors like interest rates, inflation, GDP growth, and government policies. These forces create the currents that move the markets. Ignoring them is like ignoring the wind while sailing. You might move, but not necessarily in the direction you want. Gary understood this fundamental truth. He knew that macroeconomic trends often dictate the direction of the market. By analyzing economic data and understanding the interplay of these forces, he could anticipate market movements with greater accuracy. He didn't just react to the market, he anticipated it. This macroeconomic awareness allowed him to identify opportunities that others missed. It's like having a secret map that reveals the hidden paths to market success. Inside the mind of the market, decoding market psychology. The market is not a rational entity. It's driven by the emotions of millions of individual investors, each with their own fears and biases. Understanding this human element is crucial for making sound trading decisions. This is where market psychology comes into play. Gary recognized that fear and greed are the two most powerful emotions in the market. Fear can drive prices down to irrational levels, while greed can inflate bubbles that eventually burst. By understanding these behavioral patterns, he could identify when the market was being driven by emotion rather than logic. He delved into concepts like herd mentality, confirmation bias, and loss aversion. He learned how these psychological biases influence investor behavior and create predictable patterns in the market. This knowledge allowed him to stay one step ahead, exploiting these patterns for his own gain. By understanding the why behind market movements, Gary gained a significant edge. He wasn't just trading stocks, he was trading human behavior. The snowball effect, starting small, winning big. Many aspiring traders make the mistake of thinking they need a fortune to get started. They believe that big profits require big capital. Gary's story, however, proves that this is simply not true. One of his key principles was the power of compounding. He started with a modest amount of capital, focusing on preserving and growing it steadily. He understood that even small gains, compounded over time, could lead to significant wealth. This approach allowed him to take calculated risks without risking catastrophic losses. Think of it like rolling a snowball downhill. It starts small, but as it rolls, it gathers more snow, growing larger and larger. The key is consistency. Every small gain adds to the momentum, eventually creating an unstoppable force. This approach not only minimized risk, but also allowed him to learn and refine his strategies without the pressure of managing a large account. It's about building a solid foundation, brick by brick, until you have a fortress of wealth. Playing defense, protecting your capital with risk management. In the world of trading, capital is your ammunition. It's what allows you to participate in the market and potentially generate profits. However, just like a general wouldn't send troops into battle without a plan to minimize casualties, a trader should never enter a trade without a solid risk management strategy. Gary understood that losses were inevitable in trading. The key was to minimize these losses and protect his capital. He lived by the mantra, cut your losses short and let your profits run. This meant identifying his maximum acceptable loss before entering a trade and exiting a losing position quickly. He implemented stop-loss orders to automatically exit trades when they moved against him. This disciplined approach prevented small losses from snowballing into major setbacks. He also diversified his portfolio, avoiding putting all his eggs in one basket. By prioritizing risk management, Gary ensured that he lived to trade another day. He understood that preserving capital was just as important as, if not more important than, chasing big wins. The never-ending quest, embracing continuous learning. The financial markets are constantly evolving. New technologies emerge, economic landscapes shift, and investor behavior changes. To stay ahead of the curve, a trader must be a perpetual student, always seeking to expand their knowledge and refine their skills. Gary embodied this principle of continuous learning. He never rested on his laurels, assuming that his past successes guaranteed future profits. He devoured books, attended seminars, and sought out mentors in the field. He was always eager to learn new strategies, explore emerging technologies, and gain fresh perspectives on the market. He treated every trade as a learning opportunity, analyzing his wins and losses with equal scrutiny. He understood that the market was constantly providing feedback, and he was determined to extract every ounce of wisdom from its lessons. This commitment to lifelong learning allowed Gary to adapt to changing market conditions and refine his strategies over time. He understood that in the dynamic world of trading, the only constant is change, and the only way to thrive is to embrace it. Crisis equals opportunity, thriving in market turbulence. While most investors panic during market downturns, Gary saw these periods of volatility as opportunities. He understood that fear and uncertainty often create irrational market behavior, leading to assets being priced below their true value. He had the courage to be a contrarian, buying when others were selling and selling when others were buying. This approach, while requiring a strong stomach and unwavering conviction, allowed him to capitalize on market inefficiencies. He saw crises not as threats, but as chances to acquire undervalued assets and profit from the eventual market rebound. This ability to remain calm and rational amidst the storm was a key differentiator for Gary. He understood that market sentiment, like a pendulum, swings back and forth, and that periods of extreme pessimism often precede periods of significant growth. By embracing volatility and maintaining a long-term perspective, Gary was able to turn market downturns into stepping stones on his path to financial success. Beyond the dollars and cents, finding your trading why. For Gary, trading was more than just a means to an end. It wasn't just about making money. It was about achieving financial freedom, yes, but also about intellectual stimulation, personal growth, and the satisfaction of mastering a challenging craft. He believed that having a strong why, a purpose beyond just profits, was essential for long-term success in trading. This sense of purpose provided him with the motivation to persevere through challenges, the discipline to stick to his plan, and the resilience to bounce back from setbacks. He often said that trading was a marathon, not a sprint. It required patience, perseverance, and a deep-seated belief in one's ability to succeed. Without a compelling why, it was easy to get sidetracked, discouraged, or tempted to deviate from one's strategy. By aligning his trading activities with his values and aspirations, Gary created a virtuous cycle of motivation, discipline, and success. The Stevenson Blueprint, your guide to market mastery. Gary Stevenson's journey to trading success is an inspiration to anyone looking to achieve financial freedom. His story proves that with hard work, dedication, and the right approach, anyone can master the markets. Here's a recap of the key principles that formed the foundation of his success. Embrace macroeconomics. Understand the forces shaping the global economy and how they influence market trends. Don't just trade the charts, trade the story behind the charts. Master market psychology. Learn to recognize the emotional drivers behind market movements. Identify and exploit the predictable patterns created by fear and greed. Start small, compound gains. You don't need a fortune to start trading. Focus on preserving capital, making consistent gains, and letting the power of compounding work its magic. Prioritize risk management. Protect your capital as if it were your most valuable asset. Implement stop-loss orders, diversify your portfolio, and never risk more than you can afford to lose. Commit to continuous learning. The markets are constantly evolving. Be a lifelong student, always seeking to expand your knowledge, refine your skills, and adapt to new challenges. See opportunity in crisis. Don't fear market downturns. Embrace volatility as a chance to acquire undervalued assets and profit from market inefficiencies. Find your trading. Why? Define your purpose for trading beyond just making money. Let this purpose fuel your motivation, discipline, and resilience. By internalizing these principles and developing a trading plan that aligns with your goals and risk tolerance, you can set yourself on the path to market mastery. Your turn. Taking the leap into the world of trading. The world of trading can seem daunting, especially for newcomers. But remember, every successful trader was once a beginner. The key is to take that first step, to start learning, and to never stop growing. Don't be afraid to make mistakes. Embrace them as learning opportunities. Surround yourself with mentors and fellow traders who can provide guidance and support. And most importantly, never give up on your dream of achieving financial freedom. The markets are waiting, the opportunity is there. Now it's your turn to write your own trading success story.